No, their economies are not crashing. Their markets are reacting to a dramatic change in the global order in terms of trade. And so what happens is pretty straightforward. If you're a company and you make a bunch of your products in China, and all of a sudden shareholders or people that play the stock market realize that it's going to cost a lot more to produce in China, your stock is going to go down. But ultimately, the markets, as long as they know what the rules are going to be moving forward, and as long as that's set and you can sustain where you're going to be, the markets will adjust. Businesses around the world, including in trade and global trade, they just need to know what the rules are. Once they know what the rules are, they will adjust to those rules. So I don't think it's fair to say economies are crashing. Markets are crashing because markets are based on the stock value of companies who today are embedded in modes of production that are bad for the United States. We have to be a country that thinks we're the largest consumer market in the world, and yet the only thing we export is services. And we need to stop that. We need to get back to a time where we're a country that can make things, and to do that we have to reset the global order of trade. We can't continue to be a country that doesn't make things. We have to be able to make things to provide jobs for Americans. That's it. It's that simple. China is an example. I mean, it's outrageous. I mean, they don't consume anything. All they do is export and flood and distort markets, in addition to all the tariffs and barriers they put in place. So the president rightly has concluded that the current status of global trade is bad for America and good for a bunch of other people, and he's going to reset it, and he's absolutely right to do it.
A short time ago, America's top diplomat acknowledged that markets are crashing after President Trump unveiled a slate of tariffs on almost every country that trades with the United States. But Marco Rubio says financial markets will eventually adjust to the new situation. His remarks at NATO headquarters came after China said it would respond to the tariffs with 34% tariffs of its own on all imports from the US starting in April. Well, CNN's Alex Marquardt is following the story for us live from Brussels. And Alex, a lot of convergent issues playing out at one time there in Brussels. Rubio said he doesn't think it's fair to say economies are crashing. What more did you make of those remarks?
Yeah, a little surprised, Christina, that Marco Rubio was defending his boss's tariffs, and he was pushing back on a question about economies around the world crashing. He said that's not happening, but then he rather surprisingly acknowledged that the markets are indeed crashing. And he went on to sort of explain that that's because stock markets around the world are comprised of businesses who have production practices that are not in favor of the United States. And so that's why the U.S. is trying to push this readjustment on the world. He insisted that we have to reset the global order of trade. And he said that those markets will stabilize. Businesses will stabilize once the businesses and the markets actually learn the new rules. So he put the onus really on the rest of the world to sort of figure out what the Trump administration is doing. And then he thinks that everything will readjust. This was very much a part of the conversation here at NATO. Of course, the issues that the NATO foreign ministers came here to discuss had nothing to do with trade or the economy, but there was no way that this wasn't going to be part of the conversation, even if not official. It was happening on the sidelines. And I spoke with the Canadian Foreign Minister, Melanie Joly, just yesterday, who said that it's very difficult to have these NATO conversations about defense, about Ukraine and other things while there's a trade war going on. She said that they are putting maximum pressure on the Trump campaign to withdraw these tariffs. But at the same time, the goal here at NATO was to talk about those NATO-specific issues and project a feeling of unity. Christina?
Yeah, and one of those NATO-specific issues was, of course, the Russia-Ukraine war, which he did address, Rubio did address during his briefing in Brussels. Can you tell us more about what his position was on that and those efforts for negotiation? We've
heard this growing feeling of frustration from the Trump administration over what the Russians are doing, or really what they're not doing. President Trump himself has accused Russia of dragging their feet. And Rubio did reveal that before coming here to Brussels, he sat down with the top Kremlin ally and top Putin aide, Kirill Dmitriev, the head of their sovereign wealth fund, who was in Washington earlier this week. And he said that in his meeting with Dmitriev, that he told the Russian that these talks can't go on forever. They don't want to have negotiations after negotiations, and that Russia needs to decide and communicate to the U.S. whether they are indeed serious about peace. This is a little bit more of what Rubio said in answer to a question I asked him.
What we're not interested in, and I'm not accusing them of this, I'm just telling you what we're not interested in is negotiations about negotiations. That we're not going to continue this forever. So none of it was threatening. I think it was more an explanation of This is our timeline, and at some point, it'll be clear whether you want peace or you don't want peace. And that time is coming. It's pretty short.
So a bit of a warning there that the clock is ticking. And in terms of a time frame, we asked him specifically what he was thinking about that, and he said that it's weeks, not months. And so for now, he said that there are no more rounds of talks planned. Of course, we've seen several rounds in Saudi Arabia, both with the Ukrainians and with the Russians. But Rubio also warned that the pressure is growing on the Russians, that it's not just the threats from the administration to apply more sanctions, but from the U.S. Congress as well. So very much telling the Russians that they need to make clear to the U.S. and to the Ukrainians that this is something that they want to work on and achieve in a short amount of time. Christina.
All right. Alex Marquardt, appreciate your reporting there from Brussels. The US market is open, and we will give those markets a few minutes to settle as trading gets underway. The reaction from China to the tariffs is one factor sending markets tumbling there. Beijing announcing a 34% retaliatory tariff on all imports from the United States. Meantime, we have fresh US data showing the labour market remained strong in March. The US economy added a stronger than expected 228,000 jobs as the unemployment rate changed only slightly. Well, CNN's Matt Egan is live for us in New York. Matt, walk us through the numbers that we're seeing here.
Yeah, well, look, this is a jobs report that painted the picture of a pretty healthy labor market. For now, at least, right? This showed that even though some of the initial rounds of tariffs started to kick in March, this jobs market just kept chugging along. 228,000 jobs added. That blew away forecast by almost 100,000. It's an acceleration from January and February, each of which were revised lower. You mentioned the unemployment rate. It did tick higher to 4.2%, but that was expected, and it actually mostly happened for good reasons because more people had entered the labor force. And looking at some of the sectors, we saw government lost jobs as expected because Elon Musk and Doge are cutting federal spending and workforce. But other sectors, leisure and hospitality, retail, healthcare, all of them growing jobs in a very significant way. Now, here's the catch, though. This is just a snapshot in time, as you can see on that chart, showing an acceleration in hiring in March. This is just a snapshot in time. It shows what the jobs market looked like in March. But we now know that this trade war escalated in a historic way this week, right, with the President of the United States spiking in tariff rates to levels that we have not seen in more than a century. And you noted China firing back with pretty aggressive retaliation. More countries could do that as well. The more retaliation we see, the more damage to U.S. jobs, the more damage to world growth. And so we are hearing more and more concerns from economists and from investors, and I think that we're seeing it on our screens right now with these drops in the market, more concerns about the damage, the economic damage that this trade war could do. JP Morgan last night came out and they upped their recession probability. They previously thought there was a 40% chance of a U.S. and global recession. They now see a 60% chance. Look, at the end of the day, this economy, this jobs market has been very resilient. It's bounced back from COVID, survived the inflation crisis. But this is a new test, and this may be the biggest test yet.
Yeah, certainly. 2.5 trillion wiped off global markets so far. Of course, we are having those conversations about possible recession, aren't we? Matt Egan, for now, thank you.